Good morning, everybody, and welcome to the Daily Energy Markets podcast. We have Brent crude oil trading in Asia this morning, down again ever so slightly, but at 77.43. The sort of downward draft in this oil market is continuing now, obviously, in the last few days since the OPEC meeting. I suppose we have to look at the OPEC meeting as an event that didn't interrupt the downward draft that is now 2 months underway from the highs of 94 Brent to now being 77. Ali Al-Rayami, consultant and former Director General of Marketing, the Ministry of Energy and Minerals in Oman. You're reading now 3 days after the OPEC decision. What do you think the big takeaways are and what's driving this oil price lower?
Sean, good morning, everybody. I mean, we've been following and we've been members of OPEC and OPEC Plus for quite some time now, since the beginning. But believe it or not, but this is the first time I see myself that there is a confusion in the market, and also there is a mixed feelings between the traders and also the most of the analysis coming out. They are also talking about advantages and disadvantages of this decision. So there's a lot of uncertainties, but the reality is that I think there was some few strategic issues or mistakes. I don't want to call them mistakes, but I think it is the first time, first of all, that it's the first time that we see that OPEC, announced publicly a long-term, let's say, a roadmap to 2026. It is not normal. We haven't seen this before, or maybe from a long time. The other thing is that, to allow at this time and to announce it, countries to increase their production for 300,000 barrels, to extend the voluntary cuts only for 3 months, all of this, and to announce it also, and to make it like, this is the beginning of sending back the oil, to the market up to September next year. It's all negative indications to the market, and the market was not really prepared to accept this kind of resolutions or decisions from the OPEC. And the result of that, we saw that the market reacted negatively, and we lost $4 within 3 days. So I think this is going. I hope I'm wrong, but the other side of the analysis, and also of the optimistic guys, they see that no, this is normal. OPEC, they can on a monthly basis correct the position, and also they can stop exporting. They can stop producing more, and they can change their decision on a monthly basis. But this is this extra oil is needed in the market because of the driving season and blah blah blah. You name it. But I think at the end, it was not really a very good decision. And if we are going to continue seeing this curve going down, then we are losing money on a daily basis. And there was no reason for us to lose $3 or $4. I'm talking about producers. So even if it is going to correct itself, the market will correct itself. Of course, I mean, it will not continue going down like this forever. But it will correct. But how long will it take until it corrects itself? And when can we see the curve going up, going up again? Nobody knows. But at the end, Sean, that we will be already lost 15, 40, $3 or $4 or 5 or 6 or 7 days. God knows how long. But that is the reality at the moment. And we talk about long term, while we are losing $4 today. I mean, if you're going to continue for 10 days or 14 days of losing this money, then you can calculate how much is the production of Saudi Arabia, multiply by $4, you will see how much they have lost already.
Jamie Ingram, senior editor at the Middle East Economic Survey. Jamie, your thoughts on this narrative? And I saw an interesting op-ed by Reuters overnight, one of their columnists putting this as intentional, that this is actually, the decision has shifted here by Saudi Arabia, because this is clearly a move to reclaim market share at the sacrifice of price. Your thoughts on the strategy over the since Sunday and that particular point from Reuters columnist.
Hi, Sean. Good to be here. Yeah, that's an interesting argument to be making, certainly. I wouldn't necessarily say that Saudi Arabia has entirely shifted from a price defensive position to seeking out market share. But I think that what the decision over the weekend has done is that it's set out this very clear position from the grouping that the current production levels for them is not a new normal. They are intent on reclaiming the market share that they have lost over the last year or so, dating back to April last year when they first started rolling out these voluntary cuts. They do intend to bring these volumes back onto the market, and they've provided an initial roadmap on how they're going to do that. Heavy emphasis on initial here. Prince Abdulaziz was very clear, speaking after the meeting, that to emphasize that they can pause this, reverse this. This is something that's always within their agreements, but something that he really wanted to emphasize. So this is a roadmap. We're going to see when the JMMC meets in early August, I think it is. That's another opportunity for them to decide whether to press ahead with the roadmap or whether to press pause already. But yeah, I wouldn't necessarily say that they have moved away from defending prices altogether. And from the Saudi perspective as well, it might, there is perhaps an element of this is intended to send a message for internal cohesion. There has been a lot of moves from some countries within OPEC Plus that, they do want to tap into the spare capacity that they built up over the years. Now this is sending a message that, look, just starting in a few months, rolling over, but committing to beginning increasing production from October has sent prices downwards quite significantly. So what do you think the price impact would be if we really started to unleash more volumes onto the market? So from that perspective, there's perhaps a bit of domestic internal messaging going on within this decision.
Peter McGuire, CEO of XM Australia, sitting in Asia, the big demand center of the world, certainly on incremental oil demand growth. The forecast, China is to offer up 700,000 barrels of demand growth this year. Not yet obvious that that's happening, but generally the second half of the year demand growth does increase, and maybe OPEC's sort of call here is yet to show itself.
Well, exactly, Sean. I tell you what, China's starting to, it's had a nice little rally since Lunar New Year, and the overall consumption is growing. Also, from an economic standpoint, it's grinding away. It's nothing like India, but it's certainly producing relatively strong GDP still. And the overall mood there, I feel if you strip out the property market, it's still one of relatively good confidence or strong confidence. And the appetite, if you're looking at what their consumption is from base metals as well, has been very bullish. So I feel as though that, heading into this summer period, we could see an increase as far as demand for China. And the overall theme across Asia is one I think is relatively bullish, not necessarily that bearish.
Ali, the decision obviously to start to move away from this, we're talking now, OPEC Plus is carrying over 6 million barrels of closed-in production capacity. I mean, that's clearly an unsustainable equation, if indeed even that 6 million capability is still there, given how expensive it is to maintain production capacity. Your thoughts on that there's only a certain amount of time you can keep all of those balls in the air, and ultimately, I mean, UAE has spent huge amounts of money in recent times to expand its capacity nearly to 5 million barrels a day, as many others would be spending. Your thoughts on there's just a limit to how long you can sustain supply cuts of this scale, over 6 million barrels spread across probably only a few members of that 22 OPEC plus?
Not for too long, Sean. I'm not against the idea of adding more oil into the market, but my problem was that the way that they have announced it and the way that it was published. That is really the timing of that was really concern to me. But I have no doubt that countries like UAE and Iraq and other countries that they have spent billions of dollars to increase their capacity, that they will need some time to see, return on their investments. That is normal, and it's a fair request from these countries. And of course, all of us, including Oman, we need to see our production, the full total of production going to export. We need revenues, but you need to compare between how much do you cut and how much is the incentives that you're getting from the price. Yeah, and how much you will lose if you're going to increase the production and put it in the market, and the price will definitely be affected, and it will go down. And how much is the ratio that it's a numbers that you have to judge and see how much is it I'm losing or I'm gaining. It's not a matter of building up an extra capacity, but it's a matter of revenues to the countries. Yeah. So I'm sure that one day there will be an exit strategy on this deal, but how to do it and what is the right time of getting out? It is something that.
Well, why do you think on that point, Ali? Why do you think they did it all now? I mean, it seemed like there wasn't really an urgency. I mean, there's still six months to do a lot of this stuff. Why do you think it all sort of piled up on this one meeting? And
I don't really know. I mean, I was surprised like everybody else. I mean, I wasn't expecting to see everything in one time.
I mean, the Omani minister didn't attend. I noticed that there was a deputy attending. Given
I think the schedule didn't work out to be, good for him. I think he was already committed in other meetings in Paris and in Europe, because it was planned to have the meetings on the 1st of June, and then was changed to 2nd, and then online. So everything went different. That could be the reason. I was in Vienna myself, waiting for the meetings. But I have enjoyed the good time and the good weather instead of being here in Oman or in GCC with this very hot weather. But anyway, I don't really understand, and I don't know really why the decision was taken this way. I mean, we could gradually, go to the market with a small portions of these decisions, and not to really to affect and also to stimulate the market to the extent that we see that now the prices were affected. So it is a strategy that OPEC have used this time, and I think, in my opinion, in personal opinion, it wasn't a good strategy to announce everything in one time. It's not something that we normally see from OPEC, but that was the decision, and this is the consequences.
Jamie, as I said in my opening comments, this is a 2-month journey now since the high of the early April, and so not all rests on the decision on Sunday. It just sort of adds to the momentum, it feels a little bit, of what has been a continuous downward draft. Your thoughts on that 2-month sort of bearish moves from the high of 94 on Brent to now 77, and what was it that made the decision on Sunday to sort of allow this to continue or to accelerate it? Your thoughts on that?
Yeah, I think the key thing here is that what the market went into the weekend expecting was that OPEC Plus would roll over the cuts as they were. I think generally people were expecting it would be rolling over for Q3, but then signaling that there would be the potential to roll over again through to the end of the year when OPEC Plus would next meet. What they didn't expect was this very clear commitment to beginning to unwind the cuts from October, and not just saying we plan to unwind the cuts, but actually saying exactly how they will unwind them. It's pretty, as Ali was saying, it's pretty unprecedented coming out with this by country, by month roadmap for everybody.
And what do you think triggers that?
Well, I would say that this is a little bit like an inverse of the meeting from 1 year ago, where again they surprised everybody by coming out with production cuts going out to the end of 2024. We were in a very different market then. People were generally expecting that the weakness at the time wasn't going to last. And OPEC came out and people were expecting them to have to ease those cuts a little bit before the end of 2024. But, they did clearly commit to a roadmap for the next 18 months, which is exactly what they've done this time around. Again, it's just that it's the other way around. Instead of extending cuts to the end of 2024, for the next 18 months, they've shown the roadmap out of that. So they're really trying to offer this long-term guidance. You can certainly argue that that's good for market stability, but as Ali says, it's not beneficial for their prices at the moment, especially at the moment they're in this fairly invidious position of suffering the price drops, but not yet being able to tap into the additional production because that's coming further down the line in 3 months' time.
Peter, what is out there as we look ahead from the point of view that could turn this trend around? As I said, 2 months in the making now, this downward move on oil prices, while all other commodities are moving in the other direction. What could turn this around, stop it from falling? We've got the ECB meeting this month. There's growing expectation that they will start cutting rates, the beginning of that sort of easing cycle. Would that do it?
Well, Sean, first cab off the rank is going to be Canada, and that'll be something that'll happen probably next few hours. So yeah, rate cut there, and then they'll beat ECB to the gun, and that's tomorrow. So I think successive rate cuts from both of those central banks over the summer period. You've got non-farm payrolls on Friday. From a geopolitical standpoint, everything's been very much evaporated, as we all know, and as Ali has said, and certainly Jamie, all the hot air has come out of the crude market, and I think it's taken everyone by surprise how savage it's been as far as the downside or that downdraft. What can happen? Geopolitics can tick up again. Obviously, there's no issues there from a production side, and maybe you've got to look at what the situation is. These ongoing concerns, naturally, Russia and Ukraine, North Korea firing missiles over Japan, what's happening with China and Taiwan. Certainly the Israel-Palestine situation hasn't been put to bed in any fashion or form. And so there's powder kegs happening everywhere, Sean. And then you're thinking about rate cuts. We've had a really solid downdraft on some of those base metals. Copper's back under 10,000 a metric ton it had a high there of about 10,600. 10,700. So that's given up a lot of hot air as well. And I'm expecting US dollar to take a rally, considering you've got those 2 rate cuts for those central banks in the next 48 hours. So US dollar could continue uptick there. You've got volatility. If you're looking at the S&P 500, you've got 20.3 times earnings for the S&P. So that's an unheralded sort of multiple. And then if you're taking the volatility of the VIX, Sean, the VIX is sitting at 4-year lows. We haven't seen the low of this since really the dot-com bust, or when you're looking at the GFC. So there's a lot of moving parts in this. And is that rally going to continue as far as equity markets over the summer period, or is that going to start to dismantle? We're 5 months today from an election, Sean.
Let's go to the survey question and have a look at that point I just put there to Peter. The start of rate cut cycle, beginning with ECB, and then, as Peter points out, actually Canada today, will reverse the oil price decline. As we agree or disagree, the start of the rate cut cycle, beginning with ECB, will reverse the oil price decline. Agree or disagree? Ali, I wanted to get your thoughts on the timing here of this decision by OPEC Plus. Clearly every country within the 8, obviously, in terms of what they call the voluntary cuts, would have signed off on that. And then obviously OPEC as a whole, OPEC Plus, on the rest of the cut. So, I mean, all of this stuff is done through consensus, through agreement. Every country signs on the page. Your thoughts on the timing for doing it all now?
Well, that is exactly my my concern. I mean, the timing was not really a good time to announce everything in one time. And I just want to go back to Jimmy and thank you for reminding us that that was, there was an OPEC Plus decision 2 years ago to reduce the production. And it was again, a roadmap for 18 months. I thank you for reminding us. I forgot about that. But I think the difference is that, that was to reduce, and now we are talking about increase. So these are two different things, and the market reacts differently when on those decisions. But anyway, I think again, my concern was the timing. I think the best decision was to announce that we will continue, for OPEC Plus, total OPEC Plus production, to cut for until the end of 2025. That was good. Okay, but the problem is that why do we need to say it from now that coming October we will start gradually, increasing our production until September next year to 1.66, I think.
I mean, maybe the
million.
fact that, in 3 months' time, when this, this decision, if you broke it into quarters and say, okay, we'll deal with the fourth quarter in September, that it would be too close to the American election. There'd be so much noise around that. It would be maybe gets caught by the politics of everything.
So we don't want to be driven by the American politics, Sean. I mean, we want to be independent, and the decisions shouldn't be seen like we're favoring somebody on behalf of somebody else. So my opinion was that, you keep until October, and then you come October, you have a JMMC meeting, and you say that, we will start gradually introducing more barrels to the market. But that didn't happen, and they have decided to go all the way up, to go, for the whole production, starting from October, which is, I think, it was not really a correct decision.
What about that granular amount of detail, Ali, on a month-by-month basis? That obviously it's worked out by some mathematical formula, that amount of numbers, but that it would be, at a time when most forecasts for 2025 has been sort of soft, that it would be a softer demand growth year than this year, and yet we're announcing the return of 2 million barrels. But that level of detail, is that supportive of prices? Is it bearish? I mean, what do you make of that?
I don't think so. I think it's just adding more to what we have at the moment. So it will be seen. It's again, it's like we are adding more, especially that we don't see growth in Asia, China. Still, we are waiting to see better economic growth. The inventories. I don't know if you believe IEA. Then we are very tight on that. But I normally don't believe on their numbers. So I think we are facing some difficulties. But again, countries want to know exactly what is their quotas. So if you decide to go all the way up and to increase your production, then I will wait and to know exactly how I'm going to do it. It is not something that I'm going to the upstream and open the taps. So I need to plan accordingly and to be ready to for those for those extra barrels that they are going to come from Oman, as an example. So I need to know from now for the plan purpose. So it was needed. Once you decide that you're going to increase your production, then the countries will need to know exactly how do we want to do that, and when do we want to increase our production, because there are some few investment that countries need to do in the upstream to be able to increase these productions.
Jamie, the idea that obviously these cuts were coming for the return of these barrels, as was stated in the communique, and you would say it is always the case, even whether stated or otherwise, that OPEC Plus and OPEC has the option to change their minds and not proceed. You would imagine on this trend line and this sort of price structure that those cuts, the return of those barrels in the fourth quarter probably would not happen at these levels. Your thoughts on that from the point of view of where this goes from, how locked in this really is, and at what point do you think it gets abandoned, and even an announcement to abandon it?
Yeah, it's a very good point, Sean. Definitely they were very adamant, they wanted to emphasize more so than normal, I would say, just how much they'll be monitoring this and that this can be paused, reversed, etc. As for, will they go ahead with easing the cuts in October? I think there's a very good chance that they will press ahead with that. There's certainly expectations that the market will tighten somewhat in the middle of this year in Q3. So we could see higher prices then, allowing them to start bringing some volumes back on. But will they then, will they continue doing that through November, December, or will they press pause earlier? And certainly when they come to January, is that a point in time when we will see them pause this? I think there's a very good chance of that. Certainly a lot of traders, analysts that I've spoken to, they don't really see there being space in the market for this influx of barrels in early 2025, let alone through the year as a whole, especially when you factor in the UAE uplift, which is going ahead regardless. That is something that will not be paused. So that kicks in January, where the UAE will start to taper their required production level through the year. So that will be providing additional barrels regardless. So that's going to add to the pressure to maybe not allow the group as a whole to carry on with this roadmap.
And of course,
sorry,
Please,
Sean, but
Ali.
adding to what Jamie had said, that let alone those productions coming from UAE, and we don't know what Iraq will do. We see Iran is exporting more barrels. So all of this goes to the same market. So sorry for interrupting you.
No, it's a very good point there, Ali, that Iran and Libya and Venezuela, for what they can chip in,
Exactly,
are not subject to these production cuts at all. They've been exempt through the whole process. They're still exempt, and they could be boosting supply from the group in the months to come.
Yeah.
Peter, I wanted to give you the last word. Obviously, any other day of the week in our podcast would be a massive story. India's election result and Narendra Modi not getting a majority. I think that's probably the shock of the year so far.
Yeah.
Well, yes, very much so, Sean. And, it's hit us by surprise. I think the market, if I look at that from the first side, things were looking very bullish for him on Monday. The market was up 3%. On Tuesday, it tanked down nearly 6% and spanked down heavily due to, as you just mentioned, not getting the majority and having to work with, a coalition government. And obviously the wheels are falling off a little bit to the Modi machine. He's still got a degree of support, but it's not as strong and dynamic as he'd probably hoped for, naturally. And how that's going to look as far as rupee versus US dollar. Also, are we going to see a trade-off as far as continued softness to the Indian equities in the short run? The storyline of India hasn't changed. I mean, it's a dynamic country with extraordinary GDP growth over the last 3 quarters. And I think that will probably be maintained over the year ahead. So, it's interesting times for the Indian economy and the growth engine of the world.
It is indeed. And ultimately, you would imagine that within the sort of bucket of bearishness, that Modi not having his foot fully on the accelerator will be a little bit bearish for India's energy demand, its economic thrust forward, at least for the interim period as they work this out and thereafter, but adding perhaps to some of the bearish sentiment this week. We'll have to leave it there. Thank you so much. As always, great to have your insights, Peter McGuire in Australia. And we also thank Jamie Ingram in London and Ali Al-Riyami in Muscat in Oman. Great to be all over the world in 1/2 hour. Thank you, guys. Have a great day.
Thank you.
Sean.
Thank you.
Cheers,
Thank you very much.
Bye.
Thank you. Bye-bye.